This is Ranger Kidwell-Ross, editor at WorldSweeper.com and the director of the World Sweeping Association. Today, it gives me a distinct pleasure to bring out to the industry Brian J. Ludlow, who is the executive vice president at a company called Alternative Claims Management. That company, for 24 years, has been assisting organizations like sweeping contractors and municipalities in handling the situation when they find themselves, a member of their fleet, in an accident of some kind. Brian was formerly president of Pinnacle Insurance, so he does have an extensive background in the insurance industry, which certainly helps in this situation. They work with a variety of companies, from pest management, transportation to fleets like municipalities and sweeping and pavement maintenance contractors. And the idea is to maximize your damage recovery. Specifically in what they specialize in is recovering loss of revenue for your commercial vehicles when you've had a vehicle damaged by a third party. They have recovered millions of dollars in lost revenue, and especially for the medical transportation industry. They are branching into the pavement maintenance industry, and it really makes sense to look at this if you find yourself with an accident situation. They do have a number of industry heavyweights as clients, including SCA and 1-800-SWEEPER. So if you find yourself in a situation with a loss, it's certainly someplace that you should consider giving them a call, and they'll walk you through whatever needs to be done from that point. So Brian, good morning, and welcome to the
good morning.
The industry here.
Yes, thank you. And that was a great introduction. I appreciate it. And yes, we have some of the industry heavyweights, as you call it, with SCA and a lot of the smaller ones as well. So it doesn't matter, big or small, we do them all. So, well, yeah.
And so I've seen some situations where the relatively small to medium-sized sweeping contractors have found themselves in, with serious accidents, and that involve, significant losses and so forth. So to me, it really makes sense. I'd liken this to, and this is kind of a far-reaching analogy maybe, but law enforcement tells us that as homeowners, we shouldn't have guns that we use in case of a robbery or something like that. And the reason is that seldom are we trained in them. We don't use them very often and so forth. And we're up against somebody that uses them all the time, potentially. They're a robber. That's their business, is doing that sort of thing. And to carry the analogy forward, I see this as a situation where, we're used to running a business. We run a fleet. We are not in the insurance claim business. And when we go up against an insurance adjuster, and in a situation that was not our fault, that we did not have liability, and especially it's like we're going up against the people that do this every day, and we don't have the information we need. So,
that's a great analogy. I don't know if everyone agrees with it on the call, but
yeah, they won't, of course.
Yeah, great analogy, because you're right. They are trained, highly trained, and I'm going to get into some of that with this. And hopefully by the end of this presentation, you'll understand, what exactly is involved in it, and what your options are to get you the maximum recovery. And that's the goal here. So I'll jump into the presentation if you want, Ranger, and we'll move forward here. I assume you can see my screen?
We can.
All right. So here's the things we're going to cover today. We want to go over loss of revenue and loss of use and what the difference is with them. We also want to go over what is diminution of value and the laws supporting them as well. Going to get into some trade secrets, things that the insurance companies don't want you to know. We're going to talk about pursuing old claims up to 6 years old, and that depends on where the accident happened. And some insurance challenges, your goal versus their goal, and then how to set yourself up for the best recovery. So jumping right into it, I like to keep these things short and move quick because we've all had a lot of Zoom meetings during this whole COVID thing. So type of accidents, there's basically two types, your fault and not at fault. If it's your fault, then you're going to have to turn into your carrier, your captive, or whatever type of insurance you have. However, there's two that kind of fall into the not at fault, but unfortunately end up back in your pocket, which is going to be a hit and run because there's no insurance company to go after, or there's just no insurance at all. So unfortunately, we're seeing a very big increase in the no insurances. We can go after them personally. We do that at our company as well. Typically, it doesn't produce much revenue recovery. So what I'm focusing on today is the not at fault accidents, and where the company has valid insurance that hits you, or the individual had valid insurance that hits you. The physical damage is naturally owed. Everybody knows that, yeah, they're getting an accident. The other person's, other than the state of Michigan, the other person's insurance is required to pay for the physical damage. What most people don't know is they are also required, and you're entitled to, loss of revenue and loss of use while that vehicle is out of service. And I'll get in the difference between the two. And also the diminished value is owed while it's out of service. So, or the decrease in value. So what is loss of revenue and use? You're entitled to loss of revenue use when you don't have the use of your chattel. That's the official industry term, if you will, due to an accident that wasn't your fault. And that applies even if you have spare units available. One of the things I always hear from clients is like, well, we tried to get it, but they said we had to prove there was no other units, or we had to prove we missed calls. That's not entirely true. Some states have some unique laws. And again, to Ranger's point earlier, knowing those laws and knowing how to combat those laws is a real important part of being able to settle these claims. So, and again, this is for not at fault accident. So what are the distinctions between the two? Loss of revenue is when you have a piece of equipment that cannot be rented or is not probable to be rented. And in the sweeping industry, we've gotten a couple different ways on it. We've gotten loss of use, and we've also gotten some loss of revenue claims on some of these as well, where they just could not be rented and they were specialty sweepers of some sort. In the sweeping industry, it varies, but we will try for the loss of revenue. It gives you the highest return, or loss of use would be a sweeping rental. If you were to rent it, that's what we would use. And that's where a vehicle can be rented. So to put in perspective, we use ambulances as a good example because they cannot be rented by law. I mean, you literally cannot rent an ambulance. So it becomes whatever the ambulance produced for revenue, which is typically about $2,500 a day. So if we can, look at your claim and you could not rent a replacement, the revenue that sweeper typically generates would what we be going after. So if it's out of service for 30 days and it's $1,000 a day, that's how we would pursue it. And then loss of use would be using a rental rate. What would the rental be if you had that thing? And again, it kind of depends claim by claim basis. So the law supports it. And why is the law support loss of revenue? Because nobody dropped a spare unit on your lot for free. So if you have spare units, you've obviously incurred costs in licensing, maintenance, equipment, inspections, decals, all those different things to keep that spare on there. So that's why the law is on your side when it comes to getting loss of use or loss of revenue. There's a restatement of torts. This will be available, the slideshow afterwards. That's the law that supports it. I'm not going to get into it. I'm not a lawyer and I don't play one on TV. So diminished value. I use a pickup because everyone can understand a pickup. It's easy to understand. So you are entitled to the decrease in market value for your vehicle as a result of an accident. Like I said earlier, that's one of the things that you're entitled to. Now, again, like loss of use and this diminution of value, you may be entitled to it, but getting it and how much you're getting, well, that's where companies like us come in to be able to really maximize that recovery. So never crashed, this vehicle is worth $45,000. So it's a great pickup, works good. Then you get in a little fender bender, Ranger hits something, brings it to the body shop, gets fixed, looks good, drives good, can't even tell it's damaged at all. But he goes to sell that because he wants to buy that new Corvette that he saw at the stoplight. and now he trades it in and it's $38,000. So $7,000 is a decrease in value. Now, with Carfax and all the different type of things now that's gotten very sophisticated, so it's almost impossible to hide an accident in these days. I mean, dealers use it, finance companies are now using it. When you go to buy a used car, finance companies runs their own Carfax on these type of things. And so Carfax also gets most of their information not only from insurance industry, but they also get it from police reports. So they pull a lot of data, and when these things go to the auction or they go to get sold, they can run a scanner down the side of them to tell whether there's been any body damage. Now, when it comes to commercial vehicles like a sweeper or attenuator, things like that, diminished value is a whole different egg, and you really have to have someone. Our particular company specializes in specialty vehicles, but you really got to understand the market and the valuations to really get good DV on those type of vehicles. So again, the age and condition and mileage make a big difference. If this pickup had 200,000 miles, it would be very tough to get diminished value. So, and the marketplace pricing on them as well. Currently, because of the supply chain issues in this year that we're in, 2022, we've gotten a very high valuation is out there for some of these things. So diminished value is a little bit more challenging than it's ever been. Here's a law that supports diminution of value. Again, I won't elaborate on it, but it's available for you if you'd like to see it. So recovery secrets. I get this question a lot. Do I get more or less from my own insurance policy? So I have an accident, not at fault. I turned into my insurance company. Am I going to get more or less if I would use someone like yourself? Well, when you turn into your insurance company, first of all, they can only pay out what's on the policy. You're restricted to the terms and conditions of the policy. So, and typically policies don't have provisions for loss of use and diminution of value. So when that insurance company pays you your physical damage, which by the way is going to be typically lower than our service or companies like us, because they're motivated, and all insurance companies are motivated to pay you the least amount possible. I don't blame them. I think if I owned an insurance company, I would probably do the same. But that is pretty much the thing across the board. They want to be fair, but they're also motivated to pay you the least amount possible. So, when you go into that physical damage, they're going to give it, and then they're going to subrogate it from the at-fault carrier. But loss of use and diminution of value isn't going to be on their list because it's not in your policy. So another thing we see happening, and this is one of those things that, let's say you have $1,000 accident and you turn to an insurance company and you have $1,000 deductible. They're going to basically say, well, your deductible is $1,000, you got $1,000, they have a nice day. They're not going to help you. Let's say that the damage is $1,400. And again, it depends on whatever your deductible is, and your deductible is $1,000. Well, at that point, they're going to hand you a check for $400 and they're going to say, have a nice day. Then they're going to look at that and they're going to say, well, gosh, this is only $400 that we're out. Is it really worth financially for us to subrogate against the at-fault carrier? And many times we see, when we do old claim reviews, we see that the deductible never got returned back to the client. Because in that case, if they went to the carrier, they would be getting the $1,400 back, when that $1,000 should go back to you because it's your deductible and they recovered it from the at-fault carrier. So I hope that makes sense to everyone.
Well, let me break in here and just ask the question that others might ask.
Absolutely.
You're entitled to that. I mean, should the insurance company, they're apparently not required by law to rebate you the $1,000 that we're using as this example.
Yeah, it is part of the law, and they are required to do it. We just see that it doesn't make it back for a lot of reasons. It doesn't happen all the time. It's more the exception than the rule. But we bring it up in here because we see it a lot when we do old claims.
I bet, because there's no way for you to know about the subrogation part. And, that's something I think most people wouldn't even think about. Their insurance covers it. They get what they can. And You know, it's their insurance, so maybe they don't want to get a rental, or, you know, they shy away from that or something like that. And so some of those actual costs to them wouldn't get put in or rebated. That's a very good point.
Well, all this stuff that we're talking about, what ends up happening is you turn it in the insurance company, or maybe you're trying to handle the claim yourself. Then you get busy. You've got contracts to do. You got your business to run. And then 6 or 8 weeks later, you sit there and go, gosh, why is that vehicle still sitting there? Oh my gosh, I got to do that. So that's what we see more than anything, is people just, they try to handle these things themselves, or they try to take it on. And it's an arduous process. And eventually, you know, the insurance company will wear you out. You will give up eventually, because you know, between all the voicemails and the emails and all that, you know, they wear you down.
And they know more than you do.
They have more patience than you do.
That's for sure.
So
that's their job.
When we have a client, I always tell them 3 things. I said, there's 3 things about using ACM. 1, they know we're never going to give up. 2, they know we know the law, what they can and cannot do. And number 3, when we make a demand, we have supporting evidence for that demand. So it's hard for them to say no. So, you know, that's what our company's motto is. And it works. So getting the right value on your vehicle, especially for total losses, this is a big one, because most insurance companies will send out somebody, or they'll use a CCC or an ADP or one of these services that aren't really trained for specialty vehicles, especially when you get into sweepers or attenuators or specialty things like that. You know, dump trucks with some special equipment on them. You know, and all those type of things. We're seeing that the graphics and all those other items, that if it's a total loss, you have to take that equipment off, and someone's got to take and put that stuff on the new one. There's all these transfer costs and things that typically don't get put into that claim. So when you hire a company like ours, I mean, we're motivated to make sure everything gets handled on that claim and to maximize the return. On Google, I just going to mention this, and we're going to get into this in a minute with the accident recreation and stuff like that. But Google Earth can be a real good tool if you're having an accident recreation issue. In other words, they say you're at fault, you say they're at fault. Pictures are God's gift to accident recreation, is pictures, a lot of pictures. But Google Earth can really help you. It puts you literally right in the intersection. You can move back and forth and you can see it. And sometimes it really helps out. Our particular company is very good at accident recreation. We can really get into it with where the impact of the vehicle was. And again, pictures are our friend. So insurance challenges. I put this slide up, and I think we've all been there one time waiting for their claim settlement. I had a gentleman just called me this morning, and he was trying to settle something himself, and he's just finally said, Brian, I'm that's it. You got it. I'm sending it over, because he's waiting and waiting and waiting. So yeah, it is a challenge. And they do have more patience than ours, to your point, Ranger. So what are the goals? You just want a fair and equitable settlement. That's all you're looking for. You know, it's against the law to profit from an accident. You don't want to profit from the accident. You just want to be put back to the situation you were prior to the accident. You're driving along, you got your sweeper, it's producing revenue, and everything's fine. And all of a sudden, you know, the Suburban came flying out and destroyed the front of the sweeper. That's not your issue. I mean, you just want to be fair and equitable with getting you back to where you were before that Suburban hit you. So their goal is to pay out the least amount possible on the loss. Again, I don't blame them. That's the nature of their business. So how do you go ahead and get those goals met for each of us? Well, when you have documentation, if you're giving them a revenue report or a repair order or whatever, put it from the original source. Don't try to send them an Excel document. They will just literally laugh at it and send it back. And the comment they always say is anyone can make an Excel document. So, which, you know, is true. So anything that you're going to ask for, if you repaired it in the shop, you better have part numbers. You better have some invoices. So if you don't, and you say, well, we repaired it for $1,300, they need something to show that that happened. So again, when you get into bigger amounts, when you're in the $5,000, $6,000, $7,000 range and you repaired it in-house, you're going to need some type of support for that document to say this is what happens. And this is the one that's challenging for people that are trying to run a business, trying to deal with their own stuff, is knowledge of the current laws. I was just reading on a claim this morning, and the gentleman said, well, there's no precedent for, insurance industry standards are to have 15 days paid for a total loss and loss of use. So, the response to that would be, well, please provide me this insurance typical settlement wording, or is it a policy? Is it, provide me with the document that says that that is what happens and that's what should be paid out, which he didn't. And then he settled the claim as I looked through the claim, because there is none. Right now, if you are trying to get any vehicle, if you're trying to just get a 3/4 ton pickup, I've got people that have ordered them last fall and they're still not here. I've got people that are 6 months out on standard vehicles, a year out on things like ambulances. The sweeping industry is not insulated from that. And if there is something that you're trying to get, there could be sitting there waiting for parts. So that's one of the things that really takes a big challenge for us to go through. Be prepared to leave dozens of voicemails and send a ton of emails without reply. I know there's people that are watching this that are shaking their head. Yes, 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 I've done that and been there. We've been doing this 24 years. Every insurance company knows us and they know us well. And they still, it takes us dozens of calls sometimes to settle a claim. Even though they know we're not going to give up, they know that we know our stuff and we know what they can and cannot do. It still takes that much time. This is a very good one. Exhaust all forms of recovery. We're seeing a lot more policy limits on things where maybe there's a $18,000 wreck and a $10,000 policy limit. You want to look to see, do they have an umbrella policy? Is it something that their homeowners would take? Is there some type of other insurance that may cover that? Were they working? Is it during the daytime? Were they working on an errand for their job? We had a situation which was just that. The person that hit my client, had $10,000 insurance, but they were on a work errand. So then the work policy kicked in. That particular claim was a $70,000 claim. So you want to look at any other forms that you can for recovery. This is statute of limitations for all the different states. They vary by state. They go from Louisiana as the worst, which 1 year, and Rhode Island being the best at 10 years. So you can go back and pursue claims. So if you had an accident 3 years ago and your state statute is 4 years, you can go back and get loss of use and diminution of value. You turned it in your insurance company, they paid you, but we can go back and then reopen that claim and get loss of use and diminution of value pursued on it. We have got, in our particular company, we've recovered millions in old claims that were just sitting in file cabinets. So the jurisdiction is where the state. So if you're in New York and you happen to get in the accident in New Jersey, then the New Jersey statute, which is 6 years, would apply to that. Some government entities, and I know there's some on this call that have sweeping companies, some government entities have no statute of limitations at all. They just literally, it's wide open. So again, loss of use and loss of revenue is pursuable, and not at fault accidents, even if you had spare units. DV is pursuable, but again, it varies by the vehicle and the type of accident and type of damage.
Well, Brian, let me break in here and ask a question. So
absolutely,
what did they do in that situation? Let's say they settled, they've signed something that said, we settle. Now they come back to
if to answer your question, if they signed a release, which typically doesn't happen, but if they did sign a release, there's nothing else you can do, because a release basically says full and final settlement. 90% of the claims don't have a release signed that we deal with. It happens occasionally. Usually it happens when there's a bodily injury thing, or there's a question and the insurance company wants to make sure they're stopping any further action. But smaller stuff, it typically doesn't have a release. Was that your question?
Yeah, that is my question. And then I have another one. I'm not sure this is the appropriate place for it, but let's say a sweeper is hit. The sweeper's out of commission, can't get a rental. One of the expenses that's happened here is that the operator of that is suddenly unemployed. In a situation like that, is the people at fault? Is that part of the liability? Can the operator of the sweeper, who's now unemployed, end up with a settlement of some kind out of that?
Well, the operator, it's kind of everything that we're doing is addressing the physical damage portion. So it would be just the vehicle that we're addressing, not the operator or anything. In that particular case, any type of business interruption insurance he may have or other types of insurance would cover that. You probably would not be very successful going after the other party, depending on whether there was an injury involved or not. If there was an injury, then that becomes a different element. And, then there may be some compensation in there for being out of work. But from a straight damage recovery section and things that we would handle only the loss of use or diminution of value on it.
Okay. Thank you.
All right. So this one's how to set up yourself for the best recovery. These are all things that I've picked up from clients, from our experience, and I kind of put them all into this little handout thing, which I'll send it to Ranger, and it's a PDF, and you can feel free to use it, change it however you want. But it's a nice thing to put in your glove box to kind of get everybody to understand when there's an accident, what to do. I can go over each one of these in detail, but I don't think we need to here. But each one of these has a story behind it of why they're here. Each one of them has had a negative impact by not following them. So don't move seriously injured people. That was a very bad story, and I don't want to get into that one because it's a lengthy one. Don't admit fault. I mean, when you have an accident, just look at the things. Don't say, "Oh yeah, I was wrong. Just don't say anything right now. Just get the essential information." This is one I do want to make sure I point out to people. Don't agree not to report. In today's litigious society, we had a situation where I was given a presentation and a guy raised his hand and said, "Brian, I have one more for you." And I said, "What's that?" He goes, "Well, my driver," this was a limo company, I believe, a transportation company. "My driver got in a little fender bender, came out, they looked at it. There was really no damage on either vehicle. So they both looked at it like, wow, let's just go on our way." So he got in the car and left and didn't hear anything. 2 weeks later, he gets a lawsuit from the person that hit him for injuries. Fast forward, after all this litigation and stuff and hassle, it ended up costing him $30,000 just to get rid of that situation in that case. So always report everything, because you don't know what's going to happen to come back like that. And get witnesses. It's great to get witnesses information. If you see somebody, go over there and try to get their name and phone number so that you have someone to call. Sometimes we have seen where we can call a witness, and if they make a statement, it can overturn it 100%. So educate the fleet.
If you're injured, let me break in to say, if you're injured and you're not able, or for some other reason you're not able to do that, be sure to ask the responding police to go to the witnesses and get their information for you.
Absolutely. And yeah, that's a great point. Hopefully you're not injured, but that's a great point. So provide the tools necessary. Everyone's got a cell phone now. It used to be we used to put the cameras in the glove box so they could take a picture, and now everyone's got a cell phone. And so take a zillion pictures. I always tell people when I'm doing these webinars, I say, if you didn't listen to anything I've listened to, the entire presentation, take lots of pictures with an accident. Every angle, the intersection, license plate, skid marks, the intersection portion of, from different angles, from the damage from far away, close up, guardrails, pieces on the curb, stop sign bent over, whatever it is. I can tell you a dozen stories where in our company, we've overturned a flat denial to 100% acceptance with small pictures. One of them that I always use is a small oil slick. Where it was on the road and the way the curvature of the road was, basically overturned that claim with our accident recreation people. So it's not 100%, but the more pictures you have, the more someone's able to look at that accident, from a forensic standpoint and understand what happened and then recreate that. So again, the ability to take pictures, gather witnesses. So this is putting it all together. What are your three options? I mean, when you have a not at fault accident, you basically got three options. You can turn it into your carrier, you can handle them yourself, or you can use a damage recovery firm. That's what our company is really called, is a damage recovery firm. There's not too many of us out there that go, there's none that do to the extent we do that I know of, but there are TPAs, there's other people that will handle claims, but typically they're not getting loss of use and diminution of values. So with turning into your insurance company, and we've talked about this before, and I'm just kind of recapping, there's typically no coverage for loss of revenue or diminished value. The deductible is paid by you until it's recovered by the subrogation. Delays for estimate, that's one of the things we hear a lot, is I was waiting for 2 weeks for somebody to come out and look at this vehicle. When you use a firm like ours, we have you go to the body shop, get an estimate right away, and then we can start moving forward on the claim. And sometimes we'll use an independent appraiser. We use those a lot to go ahead and get a really detailed specification, specific manufacturer specs, that is, to the repairs that are supposed to happen to that vehicle. Estimates, again, typically underwritten as our total losses. Or you can handle the claims yourself. Very time consuming and frustrating. Deductibles withheld. Staff's not prepared to answer, Ranger, to your point, they come firing you back with, laws, quote different laws, quote this, quote that. And so if you're not prepared to throw that back at them, it's going to be very challenging. So, and once the insurance company controls the estimate and repairs, then it's a challenge because, in our particular case, we have the body shop tear down the vehicle so that there's not a lot of surprises. And we work with body shops to make sure that they're trained on exactly how to create an estimate that's going to not have surprises with it. But if there's a supplement, insurance companies will sometimes tell the body shop, no, we have to have somebody come out and look at it. So then they'll have to wait another week, and it just brings it on and on and on. So last one is
if I can, to say that I know, at least in Washington State where I'm located, you are not required to use the body shop that the insurance company suggests, and they're always going to suggest somebody, or typically they're going to suggest a body shop in your area that they work with, that they have some kind of a deal or rate with, and that, when you cut costs, those costs have to be made up someplace. So it can be in the quality of the work done in your vehicle. So,
did you say they say you are required?
You are not required.
Yeah, you're not required. Yeah, I thought that, because you typically are not required to go to their, but you're right. They will send you to their shop, which, has a different rate. It's not always bad. I mean, sometimes those shops are very good shops. So it's not necessarily bad. They just have a negotiated deal with the body shop. What they do is just State Farm or Allstate or one of those will go to a body shop and they'll say, hey, if you reduce your rate to this amount per hour, 30 or 40, whatever the number is, we're going to send you a ton of business. So the shop, yeah, it's getting less per claim, but he's getting volume. So for the shop, it's what they call a direct repair shop, a DRP shop. So on the last one, it's using a firm like us, takes this whole thing off your plate. You keep your deductible. Obviously, you want to have someone that's well-versed in insurance regulations and the laws to support it. You want to have somebody that's got a lot of experience with that. Our particular case, we've been doing it for 24 years and starting to get the hang of it. Knowledge of specialty vehicles is a must. You know, we have done attenuators, sweepers. I think we've done almost every type of vehicle. There are boom trucks. We have done dump trucks, graders, you name it, we've done it. Choose a performance-based firm so they're aligned with your best interest. In our particular firm, we don't make a dollar until you get something you're typically not getting, which is loss of use and diminution of value. So if you had an accident, your estimate was $8,000, all we got you is your $8,000, you wouldn't owe us a dime. You want to pick a firm that's going to be putting their efforts into this. So you're not spending a dime until we get something that you're not getting now.
And let me jump in here to remind everybody that because you know, it's not just sweeping contractors, it's municipalities that operate sweepers, operate graders and all this other equipment that Brian's talking about. And yes, it's not as personal, this extra money, as it would be if you were a sweeping contractor out on your own. But bringing that money back to your municipality and to your budget is something that is just fair to everybody concerned. So as a municipality, this is also something that you should certainly look into. You're no better prepared to handle these types of insurance claims than is a contractor. So it just makes perfect sense.
Yeah, we do a lot of municipalities. We just had one municipality that we just did a case study on. We had 51 claims for them, and we recovered over $157,000 that went back to their budget with just 51, and they were all old claims, no new claims. Municipalities typically have some type of process where they just turn it in, they get the physical damage. They're not getting loss of use and diminution of value. So yeah, our program for municipalities have literally recovered thousands and thousands of dollars. We did the New York City Fire Department and did a ton of claims for them. I don't even know what the number is, but it was astronomical what we got for recovery. So I'm going to give you some, I can't speak for other companies, but these are some of our results. You can see there's a street sweeper with 8,800 in damage and 17 for loss of revenue. An attenuator, 21,000 and was physical damage, got 9,800 in loss of revenue. Another street sweeper, 4,400 and 55. You know, it depends on how far it's out of service, and you can see the other different types of vehicles we have. So what questions do you have? I guess is open up for any questions you're thinking of, Ranger.
Well, what question strikes me is, why would anybody choose to pursue an accident situation on their own when they could just turn it over to an organization like yours and have that streamlined and done for them, any more than you would take a lawsuit and defend yourself, or have a medical condition and look it up on the internet to see what you can do. So really, I asked the questions that I have, Brian, along the way. However, I want to encourage all of our listeners there'll be a comments box at the bottom of the page where this article is located, or a link to an email. And if you have questions, be sure to put the questions in. We'll get the answers from Brian and add them as an addendum to the bottom of the article.
All right. Well, thank you for your time. I really appreciate it, Ranger. It's been a great time, and appreciate all your help. And I look forward to hopefully recovering stuff for people. To kind of elaborate on your last question, you know, the only reason people would try to do it themselves would be probably they think they couldn't do it on their own, and we see all the time that just doesn't get the same results. So.
Well, I'm not surprised to hear that at all. That seems like that would be exactly.
But I have looked up on the internet to see what's wrong with me sometimes.
Well, thank you very much, Brian. And as you see on the screen, we've been talking to Brian Ludlow, and all his contact information is there. And of course, will be in the article once you click out of the Zoomcast. So thanks again, Brian. And this is Ranger Kidwell-Ross, editor at WorldSweeper, director of the World Sweeping Association. wishing you an accident-free day, and I hope that each and every one of you never has a reason to use Brian's firm. But if you have an accident, I know that was a very convincing presentation. Thanks.
Thank you.